You step into the command center of like a modern, massive financial institution,
Yeah,
right?
yeah.
And the first thing that just totally hits you is the sheer scale.
Oh, absolutely. It's overwhelming.
Yeah, you're greeted by these glowing floor-to-ceiling dashboards, and they're meticulously designed to show you this very specific, almost intoxicating type of success.
Right, the vanity metrics.
Exactly. You see the numbers ticking up in real time, millions of new accounts being opened, endless streams of credit cards issued, the sheer volume of digitized payments.
Yeah, it creates this mesmerizing illusion of unstoppable progress.
It really does.
Yeah.
But, step physically away from that dashboard, walk out onto the street. You start to realize that for a vast number of people out there, banking technically exists, but it remains entirely unreachable.
Yeah, and that highlights a massive blind spot in the industry. We've built these systems that look, well, incredibly successful on paper.
Right.
But we haven't stopped to ask if those systems actually function for the human beings they were supposedly built for.
And that is exactly the core of our deep dive today. We're looking into India's financial frontier.
It's such a fascinating topic.
It really is. Whether you're studying the mechanics of the banking sector or you just want to understand how massive technological shifts collide with everyday human life, this is a conversation you need to hear.
For sure.
We are looking squarely past those vanity metrics of explosive growth to uncover this quiet, foundational revolution happening in finance right now based on our sources.
Yeah, because we're witnessing a critical shift in how the industry even evaluates success,
Right, like what's the actual goal here?
Exactly. For a long time, the only metric that mattered was counting how many people were technically in the system.
Just getting an account open.
Right. That was the
Okay.
gold standard. But today, the new metric, the one that actually dictates survival, is analyzing if those people can actually use the system.
Okay, let's unpack this. Because the tension between this massive financial onboarding
Mhm.
and actual user capability is, it's where the real friction lives.
It really is.
When we talk about expansion, the industry is usually talking about getting a bank account into the hands of every single citizen, which, sounds great.
It sounds perfect on a press release.
Exactly. But look at the specific users who get left behind when expansion is the only goal.
Oh, there are so many examples.
Right. Think about a senior citizen who has an account, but they're completely overwhelmed by the rapid-fire menu screens at an ATM. The interface is hostile, the timer is ticking down, and, they panic.
Yeah, or consider a visually impaired user who tries to use a new mobile banking app.
Whoa, that's a huge one.
Right? The developers didn't include descriptive alt text in the code, so the software they use to read their phone just says, like, button, button, button.
Wow, that's incredibly frustrating.
They hit a digital brick wall, completely shut out.
And we also have to factor in the millions of rural households, right, where digital connectivity is incredibly fragile.
Spot on. And digital confidence is even lower in those areas.
Yeah, so for those households, having an account number doesn't magically solve their financial needs if the infrastructure required to access that account constantly fails them.
Right, a spinning loading screen that just drops out mid-transaction.
Yeah.
That shatters their trust in the entire system.
It's like, okay, here's an analogy. It's like celebrating giving everyone in a sprawling city a brand new free car.
I like this.
The mayor is on television, cutting the ribbon, pointing to a dashboard showing 1 million cars distributed. But then you look closer and you realize half the population doesn't have the keys.
Right.
Nobody was taught how to drive, and the city hasn't even bothered to pave the roads yet.
Yeah, exactly.
We're staring at 1 million cars stuck in the mud. Like, what good is the car?
To take the analogy further, what's fascinating here is that the regulatory bodies are finally realizing they're the ones who have to start paving those roads.
Right, because having the car isn't enough.
Exactly. This explains why the disconnect matters so deeply. Historically, inclusion was defined purely by mass account growth.
The vanity metric.
Right. And that creates a highly dangerous false sense of victory. If vulnerable customers remain constantly dependent on others, like a family member, a neighbor, or a bank teller, to execute a basic transaction, they aren't actually included.
So if you can't operate your own account independently, your financial inclusion is merely symbolic.
Exactly. It's an illusion of access.
And because that chasm between having an account and actually being able to use it is so vast, we're seeing regulatory bodies stepping in forcefully.
They have to.
In this specific landscape, our sources detail how the Reserve Bank of India, the RBI, is driving a subtle but massive paradigm shift.
Yeah, and the direction they're pointing the entire industry toward moves entirely away from just basic inclusion and focuses intensely on ability.
Independent functionality.
Yes. The mandate is now about enabling customers to function independently within the financial system.
Okay, but let me play devil's advocate here for a second,
Go for it.
because I can hear a veteran bank executive rolling their eyes at this right now.
Absolutely.
Somebody who's spent 30 years focusing strictly on the bottom line, efficiency, massive scale. They're looking at all these new accessibility mandates and thinking, look, we're a bank, not a charity.
We opened the accounts. We did our job.
Right. They probably view this push for universal accessibility as just a PR stunt. Like, put it in the corporate social responsibility budget and let's move on.
Well, that is the exact point of disagreement happening in boardrooms right now. You have veteran executives clashing with modern accessibility advocates.
So how are the advocates pushing back?
They're pointing out that the old guard views accessibility as a sunk cost, right? A side conversation or a nice-to-have CSR checkbox.
Yeah, just good optics.
Exactly. But that mindset is entirely outdated. Accessibility is becoming a core business expectation.
It's not optional anymore.
Not at all. It's a fundamental requirement that dictates product design, technology choices, staff training, and ultimately long-term industry trust. I mean, think about it. If a significant percentage of the population requires a third party to use your app because of poor design, your app is broken.
It's basically failing its primary function.
Exactly.
So it's shifting from being a philanthropic gesture to a fundamental mechanism for market survival.
Precisely.
If independent functionality is the new core expectation, let's break down what this new architecture actually looks like in the real world.
Sure.
What are the actionable steps banks are taking right now? Because our sources highlight a couple of really cool real-world examples of inclusive bank branch design.
Yes, the physical upgrades are a big part of this.
Right. Like first, we're seeing banks install proper physical clearance and ramps right at the entrance so someone in a wheelchair can actually navigate the lobby without asking for help.
Which seems basic, but it wasn't the standard.
Exactly.
Yeah.
And second, on the ATMs themselves, they are integrating tactile keys on the PN pads so visually impaired users can feel the numbers.
Yeah, alongside robust audio jacks, so the machine can literally talk a user securely through their transaction.
That's incredible. But the physical upgrades are just one piece of the puzzle, right?
Right. The digital imperative requires an even deeper overhaul. Banks are being forced to rebuild their digital payment systems for actual usability.
So what does that look like for a non-technical banking student who might be listening?
Mechanically, this means designing apps with clear, high-contrast text that can be magnified by the user's phone settings without, completely breaking the layout of the app.
Oh, I hate when you zoom in and the buttons disappear off the screen.
Exactly. And it means ensuring total screen reader compatibility.
Which requires what exactly?
It requires developers to tag every single digital element so a smartphone can verbally read the account balances and transaction buttons accurately to a visually impaired user.
Okay, that makes sense.
It's about creating intuitive user journeys where the path from logging in to sending money follows a logical, predictable sequence, rather than trapping the user in a maze of promotional pop-ups.
It goes beyond just fixing the screens, though. Our sources talk about actionable steps banks can take to improve customer digital confidence.
Yes, assisted digital banking is huge here.
Right, it's a massive push.
Yeah.
This is a highly actionable step for bank managers. It blends the efficiency of technology with the empathy of human help.
Yeah, you don't just hand a tablet to someone who has never used a touchscreen before and walk away.
Exactly. You have an agent guide them through the interface until they build that digital confidence.
That human-in-the-loop model is crucial. And alongside assisted banking, we're seeing the rollout of flexible, risk-based KYC Know Your Customer protocols.
Oh, this part is fascinating.
It's a total game changer for independent use. Instead of a rigid, immovable requirement for specific paperwork like a formal utility bill, which a rural tenant or a migrant worker might not have, the system mechanically adapts.
Wait, how does that actually work mechanically? How do you verify someone without the standard stack of paperwork?
The technology looks at the context. It might use localized biometric verification tied to a national ID database. Or, for low-value transactions, it might accept a localized voucher system verified by a trusted community figure.
Ah, so it scales based on what you're actually trying to do.
Exactly. A small transfer to buy seeds doesn't carry the same systemic risk as a massive corporate loan, so the KYC requirements flex accordingly.
The system stops throwing up artificial bureaucratic walls for low-risk, everyday survival transactions.
Precisely.
Let's ground this in a narrative to really visualize how this architecture operates.
Good idea.
Picture a rural customer, an older farmer, living in a village where the internet connection is incredibly fragile.
Right. A very common scenario.
He needs to verify a government subsidy payment so he can go buy supplies for his crops. In the old system, the barriers are just immense.
Yeah, he would have to travel an hour to the nearest physical branch, losing a day's wages in the process, just to ask a teller to check his balance.
Or he tries the standard mobile app,
Mm-hmm.
but the connection drops mid-loading screen.
And the text is too small to read in the glaring sun.
Exactly. The app crashes and he panics, thinking his money is gone.
Yeah.
His digital confidence is completely shattered.
And that is the exact scenario the new architecture is built to solve.
So how does the inclusive system change this?
Under an accessible system, he doesn't have to travel. He visits a local village business correspondent.
Like a trusted neighbor?
Exactly. A neighbor who has been equipped with a robust, offline-capable mobile terminal provided by the bank.
Oh, offline capable. That's key for the connectivity issues.
Right, and the interface on that terminal is designed with high contrast elements and uses local language audio cues.
So the human correspondent is there to assist, but the technology is intuitive enough that the farmer can visually and audibly confirm his own transaction.
You got it. That solves the infrastructural barrier of fragile connectivity, and it directly dismantles the psychological barrier of low digital confidence.
But, this design philosophy doesn't just help that specific farmer. It actually creates a massive ripple effect for absolutely everyone.
Yes, the universal design principles.
Right. It reminds me of the concept of the curb cut effect.
The curb cut effect perfectly illustrates why inclusive design is simply superior design.
Yeah. Originally, those little ramps at crosswalks, the curb cuts, were fiercely advocated for and designed specifically for people in wheelchairs.
But once they were installed, a fascinating thing happened.
Ever used them?
Exactly. People pushing strollers, travelers dragging wheeled luggage, delivery workers with hand trucks. Everyone realized it made their lives infinitely easier, too.
I notice it all the time with closed captioning on videos. It was built for the hearing impaired, but now millions of people use it just to watch a video in a noisy room or, understand a thick accent.
Yep.
How does that translate to the financial apps bank managers are building today?
Well, when a bank manager prioritizes highly readable text, logical navigation, and an intuitive interface for a senior citizen, they simultaneously make the app faster and less frustrating for a busy 20-something who's trying to quickly split a dinner bill while walking down a crowded street.
Oh, that makes total sense.
When you remove friction for the most vulnerable user, you streamline the process for the entire user base. Inclusive banking isn't a niche charitable feature set. It is a competitive advantage.
You make this sound incredibly seamless, but upgrading tens of thousands of ATMs and rewriting the architecture of massive nationwide banking apps overnight, that can't be easy.
No, it's not.
Where is the friction? What are the specific technical and infrastructural barriers preventing universal banking access tomorrow?
The friction is massive, and execution remains highly uneven across the board.
As we touched on with the rural farmer, fragile connectivity is a stubborn physical reality, right?
Yeah. You can build the most beautifully accessible, screen reader-friendly app in the world, but if the local cellular tower goes down for 6 hours a day, or the bandwidth drops to dial-up speeds, the user remains completely shut out.
Right. But aside from the physical infrastructure of cell towers, there's also the internal infrastructure of the banks themselves.
The legacy systems.
Yeah. I really want to understand this. Why is it so incredibly hard for an established multi-billion-dollar bank to just go in and add screen reader compatibility to their mobile app?
It's a great question.
From the outside, it sounds like it should just be, a routine software update.
To understand the bottleneck, you have to look at the literal beating heart of these legacy banks.
Okay.
The core databases processing these transactions were often built 20, 30, sometimes 40 years ago.
Wait, 40 years ago?
Yes. They are running on ancient coding languages like COBOL.
Wow.
These systems were designed in an era where the only output that mattered was a printed paper statement or a green text terminal for a highly trained bank teller.
Right. They weren't building for iPhones back then.
Exactly. They were built for batch processing raw numbers at the end of the day. They have absolutely zero concept of modern user interface requirements, let alone modern accessibility tags.
It's like trying to plug a modern high-speed USB-C cable into a wall socket from the 1950s.
That's a perfect analogy.
The physical architecture, the voltage,
Yeah.
the literal language of the electrical current. It fundamentally cannot communicate.
That captures the structural failure perfectly.
Mhm.
When a modern mobile app tries to use a screen reader, the screen reader needs metadata.
Like digital labels.
Right. It needs an invisible digital label that says, this specific cluster of pixels is a button that means transfer funds.
Okay.
But the legacy backend system doesn't understand tags or labels. It just spits out a rigid stream of raw data. To get the 1950s wall socket to talk to the USB-C cable, the bank has to build a massive, clunky adapter in the middle.
And in software terms, that adapter is called middleware, right?
Precisely. Middleware is the translation layer.
So it's basically acting as an interpreter.
Yep. It catches the raw data pouring out of the 1980s mainframe, scrambles to wrap it in modern digital tags, and then hands it over to the modern app so the screen reader can finally process it.
That sounds incredibly fragile.
It is. Building and maintaining that translation layer is incredibly complex, expensive, and prone to breaking. The legacy architecture actively fights against the new technology.
So what is the realistic timeline for bank managers dealing with this? Because they can't just rip out a 40-year-old foundational database tomorrow without crashing the global economy.
No, they can't. It requires a highly strategic phased timeline. Our sources suggest this is a multi-year, sometimes decade-long journey.
Okay, so let's outline key priorities for bank managers implementing these strategies. What's year one?
For the first 1 to 2 years, the immediate priority for bank managers has to be the front-end user interface and the human touchpoint.
So dealing with the surface level first.
Exactly. You fix the app menus to make them logical, you train your branch staff on assisted digital banking, and you physically install those ramps and tactile keys at the ATMs.
You stop the immediate bleeding at the customer level.
Right. Then, in years 3 to 5, banks have to aggressively tackle that middleware layer we just talked about.
The translation software.
Yes. They need to stabilize the software that translates the old database information into something modern apps can read flawlessly with accessibility tags.
And what's the final phase?
Finally, on a 5 to 10-year horizon, these institutions face the ultimate hurdle. They have to completely migrate away from those rigid legacy mainframes and rebuild their entire core on modern, flexible, cloud-based architectures.
That sounds like a monumental undertaking.
It is. But those cloud systems inherently support universal design from the ground up, requiring no clunky adapters.
Right.
Yet, despite these massive obstacles, the regulatory and industry direction is set. The mandate to the banks is clear: figure out the engineering, because accessibility is no longer optional.
And looking past that massive timeline and the legacy tech hurdles, the ultimate destination fundamentally alters the philosophy of the industry.
It really does.
Our sources suggest India's financial story is moving from a narrative of expansion to a narrative of belonging.
A longing is a profound concept to apply to a financial system.
Yeah, we usually reserve that word for communities or families.
True, but in this context, it has a very specific mechanical meaning. Belonging means the ability to transact without fear.
Wow. Transact without fear.
Exactly. It means navigating a financial interface without confusion. And most importantly, it means functioning without constant dependence on someone else.
When you design a system that a vulnerable customer, whether they're visually impaired, elderly, or digitally hesitant, can use with total independent confidence, you're not just facilitating a transfer of funds.
No, you're building deep, unshakable trust.
And trust is the actual currency of banking.
Absolutely.
If a vulnerable customer knows that your institution is the one place that doesn't make them feel foolish, helpless, or dependent, they are never going to leave.
It builds incredible loyalty.
It makes the financial frontier deeply human.
That human element becomes the ultimate competitive advantage. By focusing on independent ability and true belonging, banks transform what used to be a stressful, intimidating necessity into a genuinely empowering tool.
This has been such a wild conversation. I mean, we started this deep dive looking at those flashing floor-to-ceiling dashboard metrics, the industry celebrating millions of accounts opened, and massive digital expansion.
The vanity metrics.
Right. But we've unpacked how that is only half the story. The real work is transitioning from simply getting people into the database to giving them the ability to use the tools independently.
We've seen how physical branch upgrades, the implementation of universal design principles, and assisted tech are battling against the friction of rigid legacy systems to create a truly inclusive environment.
And we've seen how this shift forces the industry out of a purely transactional mindset, pushing it toward a relationship mindset built on long-term trust and independent capability.
It's a fundamental rewrite of the rules.
So whether you're studying to build the next big financial app, analyzing market trends, or simply managing your own digital accounts, remember this. True progress in technology is never measured by how advanced, complex, or flashy a system looks to the engineers who built it.
That's a great point.
It's measured entirely by how many people can successfully and independently move forward with it.
Which leaves us with a critical question to consider as this landscape evolves.
Yeah.
If the absolute new benchmark for banking success is independent usability and belonging, what is the long-term risk for legacy financial institutions that stubbornly continue to design products solely for the average able-bodied user?
Right.
Will their visually advanced, heavily engineered, but completely inaccessible systems soon become their biggest financial liability in a trust-based economy?
That is a vital question to keep in mind the next time you see a dashboard flashing its successes. Thanks for joining us on this deep dive.